Good morning, everybody. Welcome to Monday, October 23rd, the beginning of week number 5. So we're done with 4 weeks. We're done with the first midterm exam that covered chapters 10, 11, and 12. In the next few weeks, I would call it the second third of the class, we'll be covering probably the most challenging topics in this class and possibly accounting 1A and 1C combined. So we'll be covering, obviously, as you know, in 13, equity. In chapter 14, it will be bonds, and in 15 will be investments. With respect to this week, we'll be talking about corporate transactions, which mostly focuses on equity. And in that case, we'll be looking at 6 different learning objectives. The first one will be LO1, and that will cover how to form a corporation in very general terms. What are the characteristics of a corporation as well? And then starting with LO2 through LO4, you will be learning how to account for the transactions that relate to corporations, such as issuing of stock in LO2, repurchasing your own stock, which is called treasury stock, that will be LO3, and then dividends, both cash and stock dividends, will be discussed under LO4. In LO5, you will learn how to report the corporate income statement and balance sheets. And then finally, LO6 will be, again, the usual performance topic in each chapter. In this case, you'll be talking about earnings per share and return on common stock, as well as a price earnings ratio, PE. You probably haven't heard these terms before: EPS, return on equity, and PE ratios. Those are the sort of the usual ones in the news all the time. So here's what, when you start seeing how they come up with those numbers. As always, I'll show you a little more detail in terms of the outline of the topics. Also by learning objective, again, LO1, characteristics, they give you the basics of, what does it mean to have a stock, and what are the rights for stockholders, what is capital stock, and what is stockholders' equity. In LO2, you're going to issue stock at par, at a premium, or you technically could do a discount, but normally that doesn't happen. So that they're only showing you issues at par and at a premium. There's also something called par, and you will learn that par and stated value are the same thing basically, and they're just basically reference points for accounting. They have very little use these days. And there's also another more important topic, more important than actually the par section, that is called or covers preferred stock. LO3 is how you deal with the repurchase of your own stock. We call that treasury stock. You will learn how to repurchase it and how to resell again. And LO4 then talks about dividends. There you will learn how to account for cash dividends, declaration, the recording of the dividend, and then the payment dates. You will see that only the declaration and the payment dates reflect an actual accounting entry. The record date is just simply who owns the stock on that date, gets the actual cash. There's also a couple of terms, cumulative versus non-cumulative. You'll see that if you have dividends for preferred stockholders that are not paid, we call those past dividends. If you have a cumulative preferred dividend, that means that you have to pay them first before you pay anything else in the future in terms of dividends to cover stockholders. So you'll learn more about what this is when you read the book. There's another little section about stock dividends. There are 2 types, small and large. And so it will give you the definition of which is which when you go into that section. And finally, again, you get into the income statement reporting and return earnings as well as the equity section of the balance sheet. And then the evaluation part, LO6. I do want to sort of give you a little bit of heads up on one concept here. There's always a sort of a guideline that I always ask my students to follow as they think through all these transactions. This also applies to what you've learned already in chapters 11 through 12. But I bring it up here because I think it's a good time to start talking about this in this chapter. And that is when they ask you, here's a transaction, how does that affect the financial statements? So you have to sort of think about the journal entry itself, and then how each of those parts of that journal entry will eventually, once the financial statements are reported, how are they going to be sort of integrated into those numbers, into those reports. So you have to think about the effects of each of those parts on the financials. So that's what I'm giving you here in this slide. You always talk about the effects on the income statement in terms of the revenues, the expenses, and then obviously the net income, net loss. I should put an S there. And then, as we all know, there's a connection between the net income and loss number and the equity section of the balance sheet. So when you say what's the effect on the balance sheet, if there's any effect at all on net income, net loss, there will also be an effect, obviously, in equity. And then there's also effects on assets and liabilities. Sometimes there's also equity effects without having to go through the income statement. So keep that in mind as well. And so now I will actually show you a couple of examples of how you think about the effects. The first example we seem to be an issue of stock at par. And I should take that out. And so when you issue stock, as you see, when you read the chapter, you will actually, as a corporation, you will receive cash, and then you will actually issue some stock to outsiders. So we call those outsiders now stockholders when they get our stock. Cash, as you already know, is an asset account, has a debit normal balance. So a debit means that it goes up. And also common stock, being an equity account, has a credit normal balance, means that it goes up with a credit. So that's the actual journal entry. The question is now is, what's the effect on the financial statements? On the income statement, revenues, there's obviously no effect. Neither one of these accounts is a revenue account, so there's no effect. Neither one of these accounts is an expense account, so there's no effect either. So obviously there's no effect on net income. How about on the balance sheet? The balance sheet, well, we got cash, so assets go up. So as we have a green arrow going up and cash as the account. There's no effect on liabilities. There's nothing to do here. There's no account here related to liabilities. And equity goes up. So common stock is an equity account, so you have a green arrow going up. So as you notice, the effect is balanced between the assets and the liabilities and equity, which is always a balance, as you know already. Now that's one example of how you deal with the question about effects on the financial statements. Another one is the second example here, a declaration of a cash dividend. As you see later in your book, you will actually book a debit to a cash dividends account and a credit to a cash dividends payable when you declare a dividend. You haven't paid it yet, you just declare it. The board of directors will declare a dividend, and they will then obligate themselves to pay it eventually. And that's the reason you have a payable right there. So a liability account is the payable here. Has a credit normal balance, so if you credit it, as we're doing here, it means that we have a dividends payable increase or liabilities increase as the effect on the balance sheet. The cash dividends account is a contra equity account. And as you might imagine, equities normally has a credit normal balance, but it's a contra equity, meaning that it has the opposite effect, or the opposite normal balance as equity. So it will be debit normal balance. This account will be closed at the end against retained earnings. So with that in mind then, since this is an equity account and it has an increase, that means that actually equity goes down. And actually here it's not just cash, it's actually cash dividends. Let me correct that. And then there's no effect at all on the income statement at all, because there's no income or revenue or expense accounts involved in this transaction. So as you can see, you have to sort of pick it apart, take each part separately, and figure out how that affects each of those elements: the revenues, the expense, assets, liabilities, or the equity. section of those financial statements. The rest of this video is going to be a very quick rundown of the usual things that we talk about to get you going for the week. We have the module, the normal week 5 overview with some resources you want to get into. The attendance check for week 5 is a very simple thing that you need to do, as you already know. Here are the lecture notes, the answer keys. Let me show you that. The answer keys look like this as well. Again, you can check this to see how they solve each of the problems. Some of the problems are obviously the ones that are assigned per the class calendar, the ones that have the little stars here, but you also get other answer keys to review if you need more coverage for the homework. Going back to the module, you have the lecture notes, and again, I have prepared these notes for you, so you can see that you have enough notes here to get you, and videos to get you going. Some of these materials will obviously duplicate either the book or the my lab resources, but again, I just place these in a single location for you to sort of conveniently go through them. Here's some other stuff that relates to what we just talked about. Here's another section that includes the topics that include stock issues and some of the accounting as well. So you should go through each of these in detail. Here's the section for treasury stock. And finally, a section for dividends. So those are my sections for the lecture notes. Please use the discussion boards here to ask questions, or if they're not part of this but still related to the chapter, you just use this other chapter 13 questions discussion thread. Finally, as you already know, you have the usual reading check 13 and homework 13 this week. I think the 25th must be a Wednesday. I hope that's correct. And then here's the one due for Sunday, the homework due for Sunday on the 29th. And that's it. Again, hopefully we are all, up and running and ready to go and do our second third of the class this quarter. Take care. Enjoy.